The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to find out about a couple of more aggressive growth stocks now that our aggressive growth stock strategist, Brian Boland, wants you to know about. And this first one, let me tell you, is more than just a crapshoot. Century Casino.
Terry rolling the dice on those jokes, you know.
Hey, 7 come 11. What
Someone come 11, you know. And that's what investors are hoping for with Century Casinos, because that stock is about $7 right now, 7 and change, and they would like to see 7 come to 11.
Go to 11, yeah.
Exactly.
Absolutely.
Any way that it happens, whether it's all at once or over time, that's fine.
Yeah.
If we go to the screen here, we see it as a Zacks rank #1 strong buy stock. Value and growth scores of A. You know, and usually I like that divergence in these style scores, but for both of these stocks that we're going to profile here today, they're both value scores of A as well as growth scores of A. So
yeah, you've been making allowances lately in that department.
Yeah, you know, we had this little discussion yesterday in our editors group there about what value is compared to growth. And, you know, value is a notion that just some people have, you know. What is value to you, Terry, is different to value to me, but growth is a definable thing. You know, if there is revenue growth, that is a very definable set thing. So, you know, these value things, a little bit nebulous. You know, true deep value is technically anything that's selling less than a price to book of less than 1. So if you sold all the assets of the company, the stock is trading right at the asset value of the company. If it's less than that, you're saying that you are getting value for that. So your asset sales would be more than what the price of the stock is.
A little bit of education here.
Little sliver. So if we, you know, part of the reason for value though is also, you know, what is the multiple of this stock? You know, and we see a 13 times forward multiple is well below the market multiple, which is historically between 16 and 18. Sometimes that inflates to 20 or so, but obviously at 13 times, that is a good number. If we look at the estimates here, we can see the estimates have been moving up 44 cents to 56 cents. Next year, still a little bit hazy here, just 51 cents and just holding right there. So that tells me that the analysts don't have a firm grip on what's coming next year. The earnings history here hasn't been that great, but recently a solid beat with a good outperformance here, a 5-cent difference there. That was good for an 83% positive earnings surprise. And we look at the chart, stock has been held in that 6 to 8 range, tested 8 not too long ago. That big beat here hasn't really moved the stock that much, but we could see the stock moving again towards that $8 level.
Sounds like those analysts need to get a grip.
And they do. They do. They need to get a little bit better visibility on this sort of thing.
They have a better grip on Stoneridge here, SRI, the ticker?
You know, that's always the question, how good are the analysts? And, they are the thing that we judge everything off of because, supposedly they're doing their work all day, every day in their sector of, their specialty.
Toiling with their visors on.
Right, and Stoneridge here, again, a Zacks rank #1 strong buy with that A growth and A value. Again, we like that divergence, but here we see an even better forward multiple, only 11 times for this stock, which is, even that much more attractive. If we take a look at estimates here, we can see that they have moved from $1.51 to $1.60, and then a big jump next year from $1.53 to $1.77. Good history of beats, with the most recent beat being that much stronger. And then if we look at the pricing consensus chart, we're really seeing something that long-term investors would probably like more than short-term, just kind of straight up and away over the last couple of years, trading from just over 10 to now just under 20. So a couple years in on a smaller cap name, still something that investors should be taking a look at.
All right. Well, do you own either of these?
I do not.
Okay. Check out more stock information on our website, Zacks.com. If you're not there already watching this video, I say it all the time, you can just go to the home page, and there is where you start the adventure, looking to access all of the stock information that we have there for you. With Brian, I'm Terry Ruffalo.